Hello, can you listen to my voice? Hello, am I audible? Can you confirm if I am audible? Can you confirm in the chat if I am audible, please? Hello. Okay, global cinema. So let's begin our trading today. We will be trading gold and Nasdaq, and we have our levels marked, and I will just explain our levels in few minutes. First of all, I need to share my link with my community. Okay. Okay, so let's begin our trading. So the market opened at 4,406, then it went up, created the Asia high, went down, created Asia low, then during the Asia session, then during the London session, uh, it it tried to take out the Asia high, but it failed to take out the Asia high. Then it went down, took out some liquidities, and now it has come back up to touch the opening price of the day, and it tried to create a market structure shift, but it failed. Like here, it failed to create a market structure shift, and now what are we waiting for? Either buys or sells. Now we are waiting for either buys or sells. Then we are looking for. Wait for a minute, please. I will just come back now. Okay, sorry for the delay. And now for the gold, as so I am thinking that the gold will come down and swipe the SCA low of the day, and then that is we are looking for sales now. That we want this liquidity to be swiped first, that London high, then we want to see a drop down to the SCA low. So we will look at the market and see how it goes. So we are trading the wealth or a funded account right now. So like the stream and ask any question that you have in. Okay, help me out, sir. I completed all tasks, but DNA account not received. I am waiting 30 hours. So that account is no more available, friend, my friend Doodleland. Now we are compensating with some other accounts. So, and we are trading with wealth or funded accounts related. So please ask questions related to wealth or funded, and I will be glad and happy to answer your questions. So just let's wait for the market to swipe the London high, and so we can look for our re-entries to sort the market. Let's look at US 100 right now, and then we will see what to do, either sell or buy in the NAS 100. Let's mark the market opening first, so we can have a clear view of the market and where it can go. Let's look at daily time frame. Looking at the daily time frame, we can see the market is bearish. The market took out this low, or I say this liquidity, yesterday, and then the market is still going down. It might even come down to take out this liquidity here at 22,669, but it might not come today, but it will surely come down and take out this liquidity. Now let's look at the 1 hour time frame to get the idea for the day. So the liquidity at 24,511 was taken out, and then the market started to come down. Let's look at 15 minutes time frame and see if we can get any trades. The market had opened somewhere at uh, 24,194, and we are trading below the market open. So our idea is that we can go for longs right now. We can go for longs right now on NAS 100, but we must have a setup for that. So we have to wait for a setup for so till then let's look at gold. We want to see the London high to be swiped before we can look for any short entries, or at least this relative equal highs to be swiped, so we can look for short entries to the ACL. Well, you can get 50% off with code 50 off on wealth or funded, or you can use code SachinM to get 25% off. The link is in the description. You can use that link to get an account. Well, this is a new wealth or funded account, 10k account, and we will risk manage it with 50 0.5% of daily risk per trade risk, and our risk to reward ratio will be 1 is to 4. Okay, so the market had failed to create this market structure shift, but market clearly took out this liquidity, and I'm hoping for the market to go up and clear the London high before eventually going down and take out the SDL low, that is at 20, that is 4,307. Now let's look at US 100 and US 500 and other markets to see what is happening. First of all, let's mark the opening of the day so we can have a clear idea at where the market can go and where the market has started from. This is March 9 in vogue. I have to keep it. Let's delete this Fibonacci. This is end of March 20. I also have to keep this one. This is end of March 13. I don't know, actually we will need this as well. We don't need this liquidity anymore. Now we need to mark today's opening of the day. So the market closed at 449 here. Let's mark it end of. This was end of low of Tuesday, March 24, 2026. We will just copy it and paste that opening at 6 just here. We will call this end of high. Now let me show you something interesting. Can you see the market opened, went up, then again came down to its end of. It went down and again came back to touch the end of, then went up, again came to touch the today's end of, went down, again came to touch the end of. Now it has come down, and I am hoping for the markets to go up again to take out this liquidity. Can you see this relative equal highs? These relative equal highs, these relative equal highs contain a lot of liquidity. So I am hoping for the market to clear out this liquidity today, and the blue line that I'm using is for the liquidity. Okay, so that's the analysis for the day, and let's look at 15 minutes time frame to see if we have any kind of sells. What was this line? Oh, this was the liquidity of daily time frame. We also have sell side liquidity at 23,558. We have this big BC that was created yesterday, and many people had caught this. Even the kit had caught this move. They were flexing this on their X accounts. So what do we have right now? We don't have any kind of entries long or short right now. So we are, let me come back. Sorry for the delay, I'm back now. 20k free account de do. Bro, I can't give you 20k free account, but you can get 50% off with code 50 off on Wealth or Funded, and 25% off with code SachinM. That's the best I can do. Now let's look at our gold. As I had said, the gold will go up to take out the London high before eventually going down to take out the ACL low. So here it is, the gold. It came back and touched the today's opening price again. It will go down to clear at least this liquidity. At least this liquidity will be cleared today. Let's do fee from here to here and see if we have 75% retracement. And you can see from this low swing low to this swing high, if we do a fib, we have a rejection from 0.775, that is 75% of the retracement that goes down just like that. Now what we want to see is a swipe of this liquidity and then a structure shift, thunder structure shift to go for shorts. Now if you have any questions or doubts, you can ask me. Well, you can like the stream if you liked my analysis, and subscribe to the channel if you haven't subscribed yet. The gold is going to take out this liquidity for sure. Let me mark it liquidity graph. Sorry, what is happening? Like liquidity graph. This will be blue, right, middle. Okay. So we have our liquidity graph here. The market will come and grab this liquidity. As I've said, the market will come to grab this liquidity. Then we should be looking for a swipe of London high, and if possible SE high as well. Then we will look for a thunder structure shift and try to capture the fall to the SE low. So we will just wait for the market to take out this liquidity grab, and if you want to enter, but there is no entry at all according to any of my models, so we can't enter here. So if you want to enter for longs, then remember we don't have any entries right now. The market will go to the liquidity grab, and after that it might go for London high. After that it will try to take out the SE low, which is the below the market. Well, we have taken out this liquidity. This liquidity has been taken out, and now we are waiting for the market to take out this liquidity grab. But remember, many times what happens is, once we have a 75% retracement, the market eventually falls from 50% of the previous retracements. So the market might fall from here without taking out this liquidity. But before that, we will surely have a thunder structure shift, which would be from now. Right now it would be here. If we get a thunder structure shift, then I will consider entering into a short, and we will risk $50 and go for $200. That is 0.25% risk and 0.5% in risk and 2% in profits. Any questions, please? I will just come now. Just a moment, please. Well, I am back now. Sorry for the interruption. We will just wait for the market to give us our entry. Let's see if we get any entries. To the short side, we are rejecting directly from the 0.25% level. If we get a TSS right here, just right here, then we might have a fair value gap. That will be our thunder structure. That will be our thunder fair value gap, and we will take that to go for shorts. That is to the down to the market. Let's look at it. And we have 8 seconds till this candle closing. As you can see, the market has rejected from that thunder structure shift, which meaning the market will go up, and I want to take out this liquidity swipe. If the market goes above the 50% level, then I would look for a liquidity swipe of this 44,032 or 4,432 level, and even take out the SE high, and it might even take out the SE high, London high. Only then we will look for sales. And if we want to look for longs, if we can get a CISD here, that is change in state of delivery, then we might look for longs. We are still going up, meaning we will take out this liquidity, and we will also take out SE high. So if we are going to enter into this market, we can use this model called CISD. Here it is, CISD plus fair value gap. But let me confirm the CISD. If the CISD is confirmed, we will look for longs till the SE high. This can give us a trade of low will be the SL, TP will be 1:3. That's kind of a good trade, but I am not on longs at all. I am looking for shorts. I will be sorting the market only. I will not go for longs at all. We are looking to sort the market. We don't have anything else to say. The market might come. Let's take a virtual trade from here. SL will be this low, and target will be this Asia high. Let's mark it as virtual trade. Remember, this trade is not for real. What is this happening? Virtual trade not taken for real. We are bearish in today. We are bearish, and we will only look for shorts. And if we get a body candle closer below this TSS, then it is thunder structure shift. Then we will look for sorting the market. The market is rejecting from the 0.25% retracement, and that is a sign of bearishness. According, I have seen it many times. The market usually falls from this kind of situation even before clearing the liquidity gap that I have marked. but I want to see a liquidity graph before going to give a standard structure shift. And if anyone has any questions, then you can just ask me, and you might even be lucky to get an account for free. Certain times market goes for 2 3 liquidity directly, but sometimes it takes only first liquidity and it retraces back, then reverse for second liquidity. Why? Okay, so you want to say that the market goes up, takes first and second liquidity, and sometimes only takes the first liquidity and it retraces back, because that's the engineering of liquidity, man. That's at the time it's creating the liquidity, clearing one liquidity, it is creating another liquidity at the same time. And you understand? Let me show you on the charts. Okay, so your question is, there is liquidity like this, market is somewhere here, market comes up, takes out this liquidity is taken out, then comes down, takes out second liquidity, but before taking out the third liquidity, market comes down. Okay, so here the thing is, market took out this liquidity, okay, here, then this liquidity as well was taken out here, but this liquidity was not taken out, right? So the market here, what the market here did was, market created another liquidity, this liquidity. Can you see this? Let me get a little bit up, and this candle. Okay, let me, sorry for this. Market took out this liquidity here for with this candle, then market took out this liquidity here, but then market reversed, right? Market didn't take out this third liquidity. So the reason is this, that it created another liquidity at the same time. Market reversed down, went to take out some other liquidity which was down below. There will be liquidity here, a lot of liquidities will be down below. If the market clears all the liquidity, then there will be a lot of sellers to here, there will be a lot of sellers, right? Just here, when the market cleared this buy stops, there will be a lot of sellers here, they would sell the market will, then they will stop, then and they will put their stop losses where, at the near second nearest high, that is here. Okay, so the market, what will do, the market will take out the first liquidity, then second liquidity, and here the seller will store the market and put their stop losses right at the last liquidity, and then the market will go down, come down, and took out the liquidities which is below the market, and doing so, in the meantime it will create another liquidity, this one, and sometimes later the market will come with the big impulse and take out this liquidity, right? And do you understand what I am saying? So if you want to see the live example of this, then that is that is here it is. Market nearly took out this liquidity, okay, but didn't take out this liquidity. Market came down, took out the liquidities which was down the market up to this here, up to this liquidity, then now the market is again going up to take out that the liquidity which was left. Okay, so this is, while the market came down, it also created the liquidity of buy side liquidity when the market was coming to sell side. Understand? Market creates liquidity, takes out liquidity. Market does the both the task at the same time. Market creates and takes out liquidity at the same time. So that's why I have marked, that's why I am saying that the SCI high could be taken out today, because market has already taken out this high, which was this liquidity at, what is the level, 44,435. Market took out this liquidity but left this liquidity untouched. So at the, so when the market left this unliquid liquidity untouched, there were people who were sorting the market here. The people went short here, and the market came down with an impulse. At the same time, those traders who put the short here, they put their stop losses right above this market. Okay, so in the meantime, there are a lot of orders sell stops here, so that's why the market is now going up to take out those liquidity. Understood? Market creates liquidity, okay, and takes out liquidity at the same time. Market does the both task at the same time, like it will take out the liquidity and at the same time it will also create the liquidity. That's why I am aiming for the ASIA high, because you can see here this liquidity is taken out, but this liquidity is just left off. So I want this liquidity to be taken out, but market can go down from this liquidity as well and not take out this London high liquidity and go to take out the ASIA low. That's why I'm waiting for and liquidity grab to sort the market. So on the meantime, let's look at US 100. We were bullish, right? On US 100 we were looking for bullish trade, and the only way I trade on US 100 is by inversions and breakers. But for now we have a inversion fair value gap which is being respected and which is in the short side. But if we look for liquidity in the short side, do we have any liquidity? The liquidity is directly below 23,560 level. There is no liquidity or no structure between this level, so this is a clean price run, and this liquidity also has already been taken out. And one more thing that's supporting the short side is this liquidity has been taken out, market went down, market came up, this liquidity got taken out, and if we take out this liquidity as well, then I want to see a model forming here that can grant me access to a trade that will, then my target will be this end of the day. And as I had said, the let me do this is the right fair value gap, this, and that is our motto in the NAS 100, that is we are also looking for long share, but we can go for short and target this liquidity. But before that, this liquidity at 24,064 will be taken out. We have taken out this liquidity, which can also be indication of weak market, and the market might try to go down from the if we get from here. But let me see what, let me check and tell you one more thing. Yes, the market goes for near liquidity first. Here is an example of market taking out liquidity. Market took out all these liquidities, and if we see a high, this is low, this is higher high. If we see a lower low here, then we can look for sorting this market till this liquidity that is at 23,560 level. Now let's look back at gold and see what is happening. The gold is still going up, and we are waiting for this liquidity to be taken out. I'm not taking this trade because I am short on gold. My bias is bearish, because I think that the market will go down and take out the SELO, because liquidities, a lot of liquidity is below the market. Let me mark them out for you. Well, this was a 100 fair value gap model that we had taken in the SEA session. 100 fair value gap model is very exclusive and it is created by me, so I don't share it with anyone and anywhere. Just one or few more, two times I had shared it on the stream, but you have to look on my streams very darkly, I mean very, there is a liquidity. This is a very smooth liquidity. This liquidity will taken out for sure, and then the market will come to take out the SELO. We have liquidities at here. We have this smooth liquidity here. We have a lot of liquidity down, and that is why I think the market will come down to take out all these liquidities after taking any one of any three of these liquidity. So our main goal is to survey fair value break and act as support at its or its inversion fair value gap. Well, the fair value gap breaking is not anything like any specific. It can just, when the market is on its run towards grab on liquidity, it will just create impulses there, and that's why the market creates fair value gaps. And when it will become inversion fair value gap, so, well, there is one criteria for an inversion fair value gap, that is after the breaker, the first fair value gap that forms after a breaker is the inversion fair value gap. And the second criteria is in that inversion fair value gap is break, and the market trades below the high or the low of that breaker. The first fair value gap in that um, uh, run, second price run is becomes the inversion fair value gap. So let me show you how it works, the inversion fair value gaps on the market. Suppose this is the market, this is going up, this market is created a breaker, came down, and it did something like this. Okay, here it is. So we have this breaker here. Okay, suppose this is a breaker and this becomes the breaker short. Okay, so market will come, once there is a breaker created, the market will come up back up and trade to the first fair value gap inside this fair value gap. That would be the first fair value gap inside the breaker, or after the breaker will become the inversion fair value gap, right? Okay, now uh, look at this scenario. The market came up, took out this inversion fair value gap was invalidated. After this run, we will, once this run, this price leg that is of inversion fair value gap is taken out, like here it was taken out here. Okay, the first fair value gap inside this price run from left to right, the first fair value gap in this price run from left to right, like suppose this is one, this will be the minus IFVG for the upside. Okay, so let's call this minus IFVG. This is how it works. We were going up. Okay, let's wait for the I will explain this later, but for now we have a model for going short. As I said, we can reject from 50% consequent encroachment of this. So let's see if we had created a thunder structure shift or not. Let's wait, let me go for 1 pixel. Well, the market closed. Okay, so we don't have a thunder structure shift yet. If we had a thunder structure shift, then this fair value gap would have become the thunder fair value gap, and we would use this to go short till the SELO. So let's wait for this candlestick to end and see if we get a thunder structure shift. Till then, let me explain this. As I had said, well, are you understanding? Yes, brother, the video is a little slow because of my PC, and I am sorry for that. As I had said, after a breaker, the first fair value gap that is formed becomes the inversion fair value gap, and that is here. Market came to that fair value gap, it inverted. Again, market broke, took out the liquidities below. Market went up, cleared the high of the inversion fair value gap. Then market came back, Then we look at this price leg from this to this, and we look at the first presented fair value gap from left to right, and it takes out that and then goes up. That's how it all works. And let's look at gold market right now, what I was saying, and if it is taken out, yes, we have a liquidity grab. The liquidity has been taken out. Our trade was, where was our trade? We had taken a virtual trade here, right? This was our trade. We had put our entry here, stop loss was below this low, and target was here, but the market has taken out this low. So now we will look for this thunder structure shift, so we can look for any entry short. But for now we are looking for SE high to be taken out. And again, let me remind you that this is a virtual trade, not a real trade. Yeah, trade, not a trade. Let the SE high be taken out as well, and then we will plan for sorting the market. Yeah, yes, the market never retraced from swing low to high, it must do that. Okay, so the inversion fair, I hope the inversion fair value gap is now cleared properly. So now we will look for this gold trade that we want to sort, that we are planning to sort. If we get our anything to sort, then we will sort this market. Till then, let's look at US 100 and see if we have long entries. Yep, here is the live example of what I explained. This is the breaker, high low, higher high, lower low. This is the first inversion fair value gap, market was rejecting from it. As soon as this high was broken, the first fair value gap inside this price range became the inversion fair value gap, that is this one, right? This fair value gap, and we will wait for the market to retrace to it to look for longs. That will be from here. Stop loss will go all the way here, and it will be an 1:3 trade. So should we take it? Let's take this trade. And we also have this inversion fair value gap here. We have low, high, lower low, higher high. We also have this inversion fair value gap in the support. Sorry, this would be inversion fair value gap, and this will be minus inversion fair value gap, right? So we can take entry from either of these if we want to go long, but we were on gold, so let's stay on gold because I don't want to trade the Nasdaq right now. The market is really very messy right now on Nasdaq. The liquidity grab has been taken out, and now we are looking for sorting the market. Once the market comes below this TSS, we will sort the market. We will risk $50 on a 10k wealth or a funded account, and yeah, for $200, or just target the SELO. Now just wait for the market to come down. US 100 is going up, but one thing is that it never retraced back to this inversion fair value gap. We also have an inversion fair value gap here. Sorry, there is no inversion fair value gap here. Market took out this buy side liquidity. Market might go and take out this liquidity as well, but I think the market will go down after going to endow. This liquidity has been taken out. Let's mark out the today's first presented fair value gap. 32. Yes, here it is. This is the first presented fair value gap of the day. Market was playing all the time in here. Okay, so I am sure of sorting the market now. I am not on longs anymore. The market might go to here, then give an inversion fair value gap, but I am on this first presented fair value gap trade, that if we get a body candle closer below this area, then we will go for shorts. And right now on gold, we are looking for this market to trade below this 4401 level with a body candle close to short the market. So let's just wait and see what happens. Oh, so you are just watching to learn and you are done for the day. That's good. That's good that you are not trading anymore and you are when to stop. That is a very good uh, that is a very good talent, or I say that is a very appreciable patience that one can have. And that's, I like your discipline. That's a good discipline. The gold is coming down and we are looking for sorting the market. Until then we will wait till we get a body candle closer below the TSS, and only then we will take any kind of trades. Let's look at US 100. The market came down all the way to, it took away all the liquidities. Nah, no liquidity was taken out, only the liquidity is created. The NAS can come all the way up to here. So if I am to trade NAS 100, if I take an entry from here, my stop loss would go to high of this candle and my TP will come at here. So if I risk 1%, I gain 6%. I risk 0.5%, I gain 3%. That would be a good trade, but I'm on gold looking for shorts. Let the gold come down below this and let me prepare my risk to reward ratio. That 0.1 is a lot. I'm not going to risk more than $100. So let the gold come down below this level, then we will plan our trade. TSS, TSS is my, it's something that I created, and this is called thunder structure shift. It confirms the uh, making of thunder fair value gap, the model that I have made for myself to trade gold. So TSS is the structure shift. When TSS happens, then there is a creation of thunder fair value gap, and that is used by me to enter into a trade to, well, I can't explain TSS in details because I don't want to reveal my thunder structure, I mean thunder fair value gap model to anyone right now. So sorry for that. But we will see thunder fair value gap model in action today, because I'm sure there will be a thunder structure shift to the downside, and we will take that trade, and you will see that if it works or not. So we might have a thunder structure shift with this candle. Let's see. We have to wait for a body candle closer below this thunder structure shift. So there is no trade for now. We are still waiting for our model, and let's see on US 100. uh, the market only created liquidity. This trade was not triggered. Let me show you again. We will only take trade once there is a body candle closer below this first presented fair value gap, and market just created a huge liquidity below, a huge liquidity. Let's make it 3 pixels. We have this sniper liquidity here. This is a sniper liquidity. We have this high low, higher high, lower low. We have this inversion fair value gap. This is one thing confirming that the market might go down. We haven't taken down this liquidity, that so the market will surely come down. And once we get a body candle close below this first presented fair value gap, let's say first PFVG, first presented fair value gap, then we will look for shorts till a long distance till here, but for now there is no trade. Let's look at gold and see if it can give a thunder structure shift or not. Can you see how much rejection is there when at the thunder structure shift? You can use it for an anti trade. If you see a lot of rejections from here, just take a long and you will see that you have won the trade. Thunder structure shift is the real market structure shift according to me, because at thunder structure shift, the market, if the market is not about to get a real market structure shift, the market will not go below the or above the thunder structure shift. But if the market is about to go above or below the market structure shift and in the other direction, then it will surely take out the thunder structure shift. And in this case, you can see the market has even not nice to this area. You can see this structure was taken out, this structure was taken out, but when this one was thunder structure shift, the market didn't take out with a body candle close. When this one became thunder structure shift, market didn't take out with a body candle close. Only when the market takes out thunder structure shift with a body candle close, you can be confirmed that there will be a shift in the changing state of delivery of the price. Thank you, Global Cinema. That's I created it, or I can say I found it. I was just retesting, trying to figure out a model for gold, because I was only trading NQ at the last year, and I was only able to trade NQ, and gold I was not able to trade. So I just keep grinding and grinding, and then I was able to figure out a model for myself, and it works really well for me. Actually, I have created one more model that is called mass model, that is called mass block, that is for USD JPY, and it works on there as well. Let's just wait for the market to come down and give a thunder structure shift, because the market is rejecting from this place and this area a lot. The market is at its opening price. I want an fair value gap here. I want to see a fair value gap here so that we can enter into this trade with the help of that fair value gap. I want to see a fair value gap here. Come on, market, give a fair value gap. Don't just go up down and up down. I want to see a fair value gap here. Once we get a fair value gap here, only then we can look for sorting the market. We want to see a fair value gap here at the thunder structure shift. The liquidity grab is already over. We were here when we were here, right, we were here when we said the market will come here, and the market came here. Let's look at US 100 and see what is it doing. Let me plug in my charger into my phone. It's the battery is about to die. Yes, the battery is charging now. So what I was saying, that I want to see the market to come down, give a body candle close below the first presented fair value gap, and only then we can look for sorting the market. The market has taken out this liquidity at 24,102 level. It is respecting the inversion fair value gap at of this level at 24,122 level. Market went up, respected this, and straight went down and took out this nearest liquidity. So now we are waiting for body candle close below this fair value gap, and we are looking for a thunder structure shift on gold. So I want a fair value gap. I want to see a fair value gap here to enter into the markets. That's good. Now I want a body candle close. Okay, so there is no fair value gap here, so we will be confused on how to enter into the markets. There will be a huge candle here. See, as I said, there will be a huge candle at the thunder structure shift, and we have a fair value gap. If this candle at 11:10 becomes a fair value gap, then we will use this to enter into the market. But we don't have a body candle close yet. We don't have a body candle close at thunder structure shift, so there is no short right now. We want a body candle close and a fair value gap at right here to enter the short. Mhm. We will use code 50 off at the checkout on Wealth or Funded to get 50% off. You can use the link in the description, or you can use codes SachinM to get 25% off, and the link is also for that is in the description. We are trading only two markets, that is gold and US 100. Let's look at US 500 and see if we have any kind of SMT. There is no SMT. There is no SMT. Do you know I can trade oil as well? You can see my levels being respected here. You see here that this liquidity was left untouched and the market went down. When the market went down, this liquidity is were cleared, but this one was left untouched. When the market went down, it confirmed that the market will come up again to the newly created to take out the newly created liquidity. So the market came down, market came back up, took out this liquidity, then went straight down. And right now the market is trading here. This liquidity is well is taken out, and this daily fair value gap is where the market is consolidating. Let's look back at gold and see if we had a thunder structure shift. Do you know we can enter with a doji? We can use, there is thunder order block, there is thunder doji, and there is thunder fair value gap. We can use either of the three to enter into the markets. We haven't entered any trades till now because we are looking for sorting the market, and as you had, yes, we have seen there was no body candle closer below this thunder structure shift, so we can't just enter into any trade. The liquidity grab is over. The market might try to take out the London high and AC high. By the time it, by the amount of time that it has taken to clear, sorry, by the amount of time that it has taken to stay here, I think the market will go and take out the high of Asia and London. This could be a liquidity swipe. We can also look for longs here with TSS being here. But the long will be just for Tuesday high, not above anything above that. But I still want to sort the market. But if you get a long opportunity, I will long the market, but I will use only 0.25% of my account. We are in a quite an interesting situation here because the market has accumulated a lot of liquidity here. So we still don't have a thunder structure shift. Do we have? Let me check. Nah, we don't. We are still looking for either sorting or longing the market, but I want to sort. Yes. What we can talk about anything else? Hello, hello, nice. Hello, Niz. Hello, Niz. Macado. How are you? Welcome on the stream. Well, do we have a body candle closer here? Yes, we do have a body candle closer. Is there a fair value gap? Yes, there is a fair value gap here. So we will use this candle for going long. The stop loss will be all the way here, and target will be London high. Let's go. long. SL will be here, and TP will be just $100. Okay, let's take this high. Should I take this trade? Because I'm short on the market. mm, I should have taken this trade, I think, but it's still in my favor, so let's take out. That we were originally on short side of the market, but we decided to take this long because we had a week, but we had our model, so we decided to take this trade. So let's see if we get an SL or a TP, because I have only reached 0.25%, so there is no need to worry. My live timing is Asia session. uh, I don't Asia on Asia session there is no fixed time, but in well, I have entered the trade now, and let's see how it goes. In the Asia session the time is not fixed, but in London session I start from 3 p.m. EST, and during the NY session. This is a very weak setup. I have said it again. So we are just looking for higher prices. The market can take out our SL.